Hello, everyone. Welcome to the GoNoGo show for August 3rd. It's Thursday, cloudy a little bit, but I think the rains are going to hold off. As you can see, I'm on my own today. Tyler is traveling, so I will be flying solo, but I'll do my best to break down the markets from a trend perspective using, of course, the GoNoGo charts. So we'll start, as we always do, with a look at the GoNoGo asset class heat map. And we can see that the equity markets have maintained their go trend, but have weakened this week. We can see a string of paler aqua bars for this week as we came off those highs from the end of last week. You can see that Treasury bond prices, not yields, but prices, are in a strong no-go. We'll see what that means for Treasury rates in a little bit. Commodities have fallen out of their strong go trend and have painted a couple of weaker aqua bars, but still remain in a go trend. And of course, the interesting panel at the bottom there is that the dollar has moved into a go trend, painting weaker aqua bars for the last couple of days. Now, of course, it's just after lunch here on Thursday, so we don't know how the week will close. We don't know how today will close, but that's what we're looking at right now as we record this. So let's take a look now, as we do, through the macro factors that affect the markets. We'll start with the S&P itself, and we can get a look at how U.S. domestic markets are faring this week. And it's been a bit of a struggle. You can see that we've fallen off from those highs. We saw a couple of counter trend correction arrows. Remember, that means that we're seeing some trend exhaustion when we see these red triangles, and indeed GoNoGo trend indicator then painted a string of consecutive weaker aqua bars. And we've moved a little bit lower. Yesterday was a rough day, over about 1.2% lower. Today we opened lower again. Encouragingly, we've climbed today and we're higher than we opened. That's a good sign. But what I want to draw your attention to here, as everybody that follows us knows, we like to look at the interaction between the trend and the GoNoGo oscillator. And you can see that the GoNoGo oscillator has fallen to test that zero line from above. So remember, when a trend is strong, the zero line on our oscillator panel acts as an objective level of support or resistance. Of course, support when in a go trend. So you can see when this most recent trend in the S&P took off back here in March, we've seen go bars for the entire time, and the oscillator primarily finding support at that zero level and staying in positive territory. Well, now we are testing that level again. We've been in positive territory as price has made consecutive higher highs. We're now testing that level, that objective level of zero again. If this go trend is going to remain in place and remain healthy, then we will want to see this level act as support again. We'd want to look for the oscillator to move back into positive territory, which would tell us that we were seeing trend continuation. Remember, when the oscillator finds support at zero, we see these green circles appear under the price bar, and that tells us that we're seeing trend continuation. Then, of course, we look for price to challenge these prior highs. Now, could go in the other direction. We don't predict. We just try to react responsibly. And if the oscillator fails to find support here and breaks clearly into negative territory, then that could be an indication that we're likely to struggle for a bit longer. Let's back this out and look at what it looks like on a weekly chart. And you can see that the weekly chart still in strong go colors. Of course, this week not been a good week, and we're now seeing a counter trend correction arrow on the weekly chart as well. So perhaps some room for price to go a little lower if it does indeed correct from this most recent high. Let's go back to the daily chart. We'll take a look now at Treasury rates. Of course, we mentioned in that heat map that rates would move inversely to bond prices, and we were talking about how bond prices were in a no-go trend. Well, we can see that as rates have remained elevated, we are still in this go trend. The right side of the chart here showing us that we're still painting go bars, and we've had trend continuation. So rates moving now a little bit higher. You can see that we're higher than the high from March, And of course, we've got these highs from the end of last year hanging above us. So still just in this channel, but we're getting towards the upper bound of this movement, this sort of sideways consolidation. So very strong moves in rates this week. We're seeing a lot of trend continuation icons as price moves higher again and looks set to challenge these prior highs from October of last year. So rates, we've been talking about how rates are in an elevated rate environment, not necessarily a rising rate environment. Well, we're starting to see rates rise to test these prior highs. So it'll be very interesting to see where we close at the end of this week compared to where we are right now. Let's compare that with what we're seeing on the dollar, and you can see that the dollar still in its range as well, but approaching the top of the range. If you see where my cursor is hovering here, you can see this horizontal level has provided resistance several times. We're getting close to that again, and we have seen the dollar change its trend on a daily basis to start to paint those two aqua bars. So we saw the oscillator break above zero a few days ago, breaking out of this small squeeze, and we saw prices continue to rally from the bottom of this channel. Now we're approaching the top of the channel. So we'll want to see what happens here. Will we break above these highs? Will this go trend continue? But the dollar showing some strength on a daily basis as well. Let's look at oil. We know oil prices have been moving quite rapidly on a daily chart. Let's look at what that's doing to our weekly chart that we've been looking at for so long now. You can see that we've actually made enough ground to test this downward sloping resistance. We saw this last week as we broke above it on an amber bar. And we now see that we've actually painted a go color. The first go color, of course, this is an aqua bar. It looks, at the moment, we're trading right around what could be a dragonfly doji, right? We've got the open and the close very close to each other and very close to the high of the day. It's a slightly bullish bar, but remember, dojis themselves represent uncertainty. So we'll have to see how this plays out. We know we broke out of this max squeeze into positive territory. That's a very strong sign, and we've broken above downward sloping resistance, and we're seeing a go bar now on the weekly chart. So some change. We've talked about how we sounded like a broken record with oil. Well, some change now actually taking place. We've talked about it over the last couple of weeks, and this week we're seeing an aqua bar. Let's move on to take a look at the, you know what, before we do that, let's take a look at the chart of gold as well. Let's have a quick look at gold and see how gold is doing this week. You can see that we moved out of the no-go trend and into go bars, but we've now fallen away from that price strength, and we're showing quite a lot of uncertainty. We've had 4 out of the last 6 bars painted amber. Remember, those are our go fish bars. That tells us that sometimes the market doesn't give us what we need to determine trend direction, and it's better to just go fishing. So these are our amber go fish bars creeping in here. But interestingly, the oscillator was unable to find support at the zero. So we've crashed back into negative territory as we've failed to paint go bars and painting now, of course, some amber go fish bars. So a really kind of interesting time here. Will we revert to a no-go that was sort of the prevailing theme for a couple of months, or will we rally back higher and try to resume that go trend? So not a lot of certainty at all when looking at the gold chart. Let's go to our sector rel map. Let's have a look at the GoNoGo sector rel map, where we break down the domestic stock market by sector. Now, this really helps give us an idea of rotation, and this is very, very curious this week, really interesting to me, in that we've seen a further rotation out of the growth sectors this week. So I remember last week we were talking about how we were still seeing some outperformance in technology and in communications, but there had been that sort of brief foray into underperformance. Well, now we've been given sort of a clear sign that technology and discretionary rolling over to paint strong purple no-go bars, of course, on a relative basis to the S&P. These maps are good because they take price activity, price movement right out of the image, and all we're looking at on a pure panel basis is the trend of the relative prices of each sector to the S&P. And look how clearly we are seeing this rotation in the middle of the chart here. Communication is still strong, but then after that, we've got those cyclical sectors: energy, financials, industrials, materials, all now painting strong blue go bars. So we're going to take a look at what that means as we go forward here. We'll take a look at some of the growth sectors and see how they've started to underperform and what that might mean, and then also continue to look at more economical sectors that really reflect how the economy is doing itself. So let's start with taking a look at how those growth sectors have started to underperform the markets. Now, this is a relative map, so don't forget, on a pure trend basis, we may well be seeing technology still in a go trend, right? If the market's moving higher, it doesn't mean technology is necessarily in a no-go trend, but it does mean that the outperformance we've seen has started to fade. So let's pull up the XLK. This is the technology sector. And this is sort of as expected. It's still in a go trend because the technology sector has been very strong. But do you see how we've really started now to move sideways after we had this counter trend correction icon? We've moved sideways. We've painted a lot of aqua bars over the past 2 weeks. And you can see how after hitting this new high on enthusiastic market participation, the oscillators really failed to move away from the zero line. So really sort of neutral in terms of directional momentum. And we'll pay attention here to see in which way that gets pulled. You know, will the bulls or the bears win this battle? Because we're moving sideways. Momentum is sort of directionless at the moment, hovering around that zero line. If momentum kicks back into the positive side, and we see this oscillator rally off the zero line, then we'll know that the go trend is likely to persist, at least for a short term, and perhaps make an attack on this prior high. If this zero level just gives way and the oscillator moves into negative territory, that, of course, would be concerning. And you can look at this on a relative chart as well. We looked at it in the heat map, but if we just look at this on a relative GoNoGo chart, you can see how it's really struggled to hold its go trend in terms of outperformance. And now oscillators struggling below the zero line, and we're seeing some of these no-go colors creep in. So what does that mean then for stocks in the technology sector that we might have been holding, let's say, or we might have been looking to get into? Let's take a look at some of our favorites over the last several months. NVIDIA has been a great security for using GoNoGo charts. And you can see the go trend came in back in January and has been largely supported by the zero line, with the oscillator staying in positive territory. And we've seen a really, really strong go trend with series of higher highs and higher lows, lots of trend continuation, lots of opportunities to sort of press your bets or to scale in, or to even just start to participate, even if you thought you'd missed the beginning of this move. Well, we're at an important point. Again, you can see that the trend is still in place, but we are testing the zero line, and we've been sort of struggling to get away from it. So if we are of the opinion, let's say we come to the opinion that the technology sector has started to underperform and we want to lighten our positions in some of these securities, then this may be something we're going to watch for here. We're going to watch to see if the oscillator breaks below the zero line, if there's any indication that NVIDIA's go trend is getting to a point of exhaustion. Another one that we've looked at is, of course, Meta. Meta's been an incredible run. Same sort of thing, even since earlier, end of last year, Meta's been in a go trend. Same kind of idea, the oscillator mostly finding support at zero. Well, a new high even was made at the very end of last week, but we've fallen a little bit away from that this week, and the oscillator now getting close to the zero line. So important moments here. Is technology really rolling over? Are we looking at some of these strong securities? Will they start to reverse? Will they start to struggle to maintain their go trends? So that's of interest to a lot of people that we talk to at the moment. And then, of course, what is doing well? Well, we talked about how that middle of the map was really becoming the leadership group. And you can look at something like the industrial sector, and you can see how we have really taken off over the last couple of months and made a series of higher highs and higher lows. Now, a lot less extended, a lot less time spent in the Go trend compared to something like technology. So definitely a much newer trend, but you can see how instead of moving sideways or moving lower, we're still sort of holding on to this movement from left to top right. Again, though, I have to point out that we are at a point of inflection in that with the Go trend in place, momentum has cooled, and we now see the oscillator testing the zero line from above. So a similar chart in many ways to what we've just been talking about with the technology sector, with the S&P itself, trend in place, momentum testing the zero line. If we see too many more days where we sort of fall lower, we may well see this momentum break below zero. So we're going to watch that very carefully. We want to make sure that the oscillator holds at zero, rallies back into positive territory. That would then give us another one of these Go trend continuation icons if we were able to do that. And we could suggest that price might make an attempt to set a new high. So lots to look at this week. What does that mean for something like Caterpillar, which we pulled out earlier this week as an idea based on the support found at zero? Well, that one, that kicked into high gear, and we saw trend continuation, and then we've kicked on and moved higher again. Today and yesterday, obviously, have pulled back a little bit, but Caterpillar still looking very strong. So one of the large players in the industrial sector looking really strong. Does that mean that perhaps industrials are more okay than technology and discretionary? Well, we wouldn't want to say, but certainly the chart of Caterpillar looks a lot stronger than the charts we just looked at of something like NVIDIA. Where else can we go this week? Let's take a quick look at our crypto map. We'll just take a quick look to see what that's looking like, and maybe we'll even pull up a chart of Bitcoin itself, because we know Bitcoin has had some struggles of late. Even though it was moving quite nicely, it's had some struggles, and you can see that here. We're moving sideways with some pink and purple bars. And now we're starting to see that the outperformance of cryptos was really short-lived. We had a moment here where all four of these cryptos were outperforming the S&P. Not anymore. We see Bitcoin and Ethereum underperforming, as well as Cardano in the third panel. So some underperformance now creeping in on Bitcoin as well as the other main cryptocurrencies. If we take a look at the Bitcoin map itself, we had this nice move and then a strong correction as a no-go correction against. We had another gap move higher, and now we're correcting in no-go bars as well. If we are going to look for a new go trend, first thing we'll want to see is the oscillator, of course, crossing above zero and breaking above that resistance at the zero line. So at the moment, not doing too much damage, but still moving against, moving away from these highs, I should say, in a no-go trend. Right, so there you have it. If you're following us on YouTube, thank you very much. If you're following Stock Charts on YouTube, thank you very much as well. And don't forget, we are putting out a series of educational videos that really talks through some of the main concepts of technical analysis. We're putting out one a week. We're going to have 6 in total that walk through trend identification, momentum analysis, and all of the main things that go into our disciplined checklist when we use technical analysis to understand the market. So keep an eye out for those. They're going to be popping up on our channel and on Stock Charts channel as well. So thanks very much. And as of next week, Tyler will be back with me, and I look forward to chatting with everybody again last week. Take care. Be safe.